Hello, everyone, and welcome to the Learn From Us podcast. Welcome, Paul. How are you?
Thank you. I just
What were you texting?
I was not. I was on Instagram.
What are you Instagramming?
I'm not Instagramming. I was just going through my feed.
You love your dogs.
I do.
You have 4 dogs.
4.
Howard, Lucy,
Sophie,
Oliver. If I looked at them, I could see them. And they're all 4. They're all kind of the same, right? They all kind of look the same.
They're
little
small.
furry, little small dogs.
Yeah.
And they're the loves of your lives.
I do love them.
You let one of them sleep with you once a night, right? You choose.
Well, it depends. It's either Oliver alone or Sophie and Lucy together. But Howard, I haven't quite trusted him yet.
This is the puppy that Paul got at a charity fundraiser
With
a
Seth.
year ago, where my wife was bidding for Paul, and it got up there. You could have bought either the dog or
A house.
Yeah, a 94 Honda Civic. It's like about the same price. I wanted to ask you something intriguing today. I always come to you when I see these interesting articles. I think, what does Paul think? I think that's what a lot of people think in this world. Our 42 viewers want to know what you think about this.
WDPT.
Longaberger baskets.
Yeah, the big longer burger down in Columbus area, Zanesville.
Yeah, or is it Newark?
It's probably Newark. I don't know.
Anyway, east of Columbus. They have the building. Now, if you don't know, folks, what Longaberger baskets is, why am I bringing this up? Is it a catchy topic? Not really. But in the Midwest,
it's a slow news day.
Baskets are all the thing. But I read an article. The Longaberger Basket Company makes like wood. I don't know. There's wicker. I don't even know. They're like wood picnic baskets, like that Winnie the Pooh would go frolicking with. Okay, and this was all the rage. Like 20 years ago, you could not even get these things. They're flying off the shelves. Specifically tailored to more feminine women, would get into this stuff.
Okay.
But they built a 7-story headquarters.
That's a basket.
In the shape of an enormous basket. Like it's got like the rails going up top, and it's pretty wild to see. Like kind of unbelievable that they would do this. It's for sale. And I know you're into real estate, and I know you had your eye on this basket. No, but it's been for sale for
I could use?
A few years. But here's the intriguing thing. And I told this to my wife. I read the article. In 2000, Longaberger Baskets, the company was worth $1 billion. Now how, 15 years later?
20 years later.
20 years later. Well, I mean, it went under in 2015.
Oh, gotcha.
So how in 15 years... or 20 years, does a company, what do you think happened? Because my wife said, how the hell did that happen? And I'm like, well, it went through 2008, 2009. Maybe people stopped
buying baskets.
Yeah.
So we have a lot of businesses, right? We have like 15 right now.
Mm-hmm.
You got to remember that business is hard. People think you start a business and, it just goes along, and if it does well. Competition is fierce. Whenever you start to do something very well, other competitors will come to market. I don't know why Longaberger went down. It could have been bad management, mismanagement of money, too much debt. There's a litany of reasons why things go poorly. It's rarely one decision that causes something that's $1 billion to go to zero.
I sort of put myself in their place. I mean, you think the year 2000, you have this gigantic conglomerate of baskets. I mean, people must have been thinking, I'm going to be doing this for the rest of my life, and stock and like profit share. I mean, it's just like
I leased space in one of my buildings to a school, a for-profit school. In 2010, their market cap, they were publicly traded, was $3 billion. They were sold for $7 million a year and a half ago. From $3 billion to $7 million.
It's astounding.
It happens. What's the reason? Now, I'm not going to get into the whole for-profit school business and all that stuff. There's a litany of reasons. That's why we're very big on being diversified in a bunch of different, businesses, because we don't want to have bad years. We want to have low debt in our businesses. I don't think only one of our operating businesses out of the 14, because I'm taking real estate out of it, has debt on it. And even that, it's a small portion of debt. It's like a $150,000 credit line. I think we owe $118 on it. That's it. There are so many reasons, Seth. Maybe the margin was so big that it brings competition in. One of the things people don't have to remember is when a business is so good and it's new to the arena, guess what's going to happen?
Copycats?
Yeah, which is flattering, but copycats drive margins down. Dell Computer made their big money by saying, "Oh, I opened a computer up and there's $3,000 there's $800 worth of stuff in here, and they're charging $3,000 for it." So what do he think? I'll just charge $1,500 for it. I still make double my money and I sell for half their price. There's always going to be big margins. Rarely stay around forever unless there's a very high barrier to entry. I imagine making baskets is not a very high barrier to entry. A very high barrier to entry would be trains. They have very high gross margin, but you can't just go, I'm going to start a train company. No, you got to get railways, you got to get the locomotives, all that stuff. I mean, with Longaberger, I don't know their financials, and I know this is probably not great for chatting about it to say I don't know, but businesses go under for many reasons. Usually it's because of you get complacent at some point and think good times will last forever. Talk about 2000. The economy was coming off like the best growth in decades in 2000. People thought things couldn't go wrong. I'm reading that book, Security Analysis, now, right? It's that big monstrosity of a book.
Yeah.
And the reason I like the book so much, it was originally written in like 34, I think 1934, right after the Great Depression. And they show financials of companies going from 1920 to 1934 or 1933. And you see this rise in profit and then plummet, a lot of times down in deficits and going under. And you see some that, like Coca-Cola, that goes from making $6 a share to making $2.50 a share in the Great Depression. So it's still a big drop in profit, but they have a big, as Warren Buffett calls it, a big moat. He likes companies that's not easy to enter their business. I don't know if Longaberger, it was easy. I mean, how many women out there have even made their own baskets? You know what I mean? Probably a ton. I don't know. It's just, business is very tough. Making it doesn't mean just getting to the top. It's also staying at somewhere. You know what I mean? It's easy to go start a business. It's easy to go, well, I shouldn't say that, but you know what I mean? Like I can go start a business tomorrow and go, I just started a business. But okay, how do you get customers? How do you keep those customers? How do you make them happy?
Well, customers is a big thing. Yeah, I just remember in the early 2000s, like if you had a bridal shower or a baby shower, you were going to get one of these baskets.
Do you have an article I can read about maybe did they have any revenue numbers or anything like that?
Well, I think the article I pulled up was just more about how the building is still there, and they don't know if they want to tear it down or if someone wants to buy a basket building. I can't imagine there's too many people wanting to do that. Like maybe Smuckers might want to.
Oh.
I just made that up.
There's the building right there, by the way.
Yeah.
Camera.
Yeah.
I don't know if we can focus on that.
Oh, don't worry about it, Steve. We're good.
Look it up. Longaberger.
Longaberger basket. But read the article.
Well, it just says Longaberger switches to liquidation bankruptcy plan. They filed for Chapter 11, and they listed assets between $1 and $10 million in assets.
Oh, that's it?
Yeah, when they filed for bankruptcy. But that doesn't mean, they could have had, I don't know what's going on. It's just... This is incredible. This is October 31st, 2018. Longaberger has decided to liquidate its assets rather than restructure. The company listed assets between $1 and $10 million. The company has had a slow decline from its peak of $1 billion in sales and nearly 8,000 employees.
Oh yeah, 8,000.
Wow. Yeah, it's in Newark. You're right. Let's see. Wasn't there a mansion in Columbus built by the Longaberger family that was like for sale for $20 million?
I don't know. I don't know.
Yeah, something like that. I mean, it's crazy. Listen, it sounds like it's not a, very good conversation, but it's, Seth, you've had highs and lows in your business, right?
Yeah.
Some people persevere through them. Some people don't.
Yeah.
Complacence. And I'm not saying they're complacent, guys. I'm not sitting there. If anybody works at Longaberger and says, you know what, we worked our tails off. Nobody's doubting that. But at the same point,
Something happened,
and everybody thinks that corporate America and these big companies are geniuses and they know how to handle everything. You know how many real estate people I meet where I go, how the hell are you managing 5,000 units? We lost a deal last year because I told somebody who had 5,000 units they didn't know how to manage real estate. I go, you have no idea what you're doing here. And they own 5,000 units. And I legitimately would not give them money to go manage my units ever. And I look at them and go, that's just the way it works. When times are good, pigs get fat, hogs get slaughtered. When times are good, you forget about the bad times. We forget about, and that goes to the economy right now and the markets. Times are really good right now. We don't see big drops in prices except for the stock market.
Well, speaking of that was my second topic. Tim, our producer, Tim, I wouldn't want this episode to be called Longaberger because our viewership would go down even more. But I was astonished yesterday. I fired up, old Siri and asked what
Amazon stock. Son of a bitch, Siri. Amazon stock.
You don't ask it a question? That's
No.
what I do.
Amazon.com is down $9.90.
So it's down to
1914.
Okay, yeah. 1914.
Yep.
Now, Amazon stock has been a hot topic of our podcast because it's just an
Great
interesting
store.
one. Great
Yeah.
store. We love it. We
I
order.
meant Hot Topic.
What's that?
I meant Hot Topics.
Oh, Hot Topic's a great store. I tell like these punk rock kids nowadays that when I was in 1994, when Kurt Cobain died, and I met my wife, if you wanted like a Nirvana, if you wanted a Nirvana shirt, you had to go to like in Canal Fulton. You had to go to Ben Franklin, a little corner store. You had to buy like a heavy metal magazine, and then there was a page advertisement, and the T-shirts were like little itty bitty half-inch squares, and you had to cut out that square and then get a check from your mom for way too much money for a made in China T-shirt, and then send it off to get said T-shirt sent to you, hoping it would show up.
Do you know how you sound right now? You sound like that 80-year-old. Full circle.
Here comes your pirate impression.
But now it's an old person impression.
No, I'm just saying.
No,
like,
you're right.
The world has changed
And
so
Amazon's
much.
done that.
Yeah, what's that?
And Amazon has done that.
Thank you so much.
What I want to buy, what did I try to buy yesterday? Oh, I want to bring a guitar down to Mexico. So instead of buying a fancy guitar that's going to be expensive and use 3 times a year, I said, let me go buy one of those all-in-one packages. I went to Amazon. There was like 300 options for like under $300. Includes speaker, includes the amp, the guitar by Fender, Squier, all these cords, picks, everything, guitar strap for like $234.
Did you ship it straight there?
No. I'm taking it with me, and I thought to myself, well, it's so cheap, I'll pay the $50 fee to get it shipped as a piece of luggage for me because it only weighs 26 pounds, right? But I'm looking at it going, damn, Amazon has changed the world. And because of that, what's happened to its stock price?
Well, so I was very happy when I had thought that the Amazon stock had topped out at around 17, 15.
Well, no, it hit
17.
2050
What's that? When was this?
in September.
Oh, last September. Yeah, of course.
When the market topped, they hit 2050.
Well, it also had dropped. When did it drop down to like
13,
15?
was it like 1350?
1350.
Well, maybe it wasn't 1350. I'm probably wrong.
I thought it went down to like 15 something.
It probably did. I'm probably
It's
wrong
been
on
all
that one.
What does this tell you? Then the fact that it's up to 1900.
Well, that's a great question. What does that tell me?
Yeah.
Does that sound normal to you that the company that's considered like the best company in history in a matter of months can drop 25%? Is that normal? Does that sound like something? Let me ask you this question. You did well in school. Did you have some tests you got 100% on and some you got 75% on?
Maybe sometimes, but
Sometimes, maybe. And even that, I doubt you did poorly
no,
overall.
you can't keep that up and then be successful. No.
Amazon hit 2,000 a share because people don't care about what the value is.
You've said this the whole time.
They just care about it being Amazon, and it is the best company in the world, and they're changing the world, and blah, blah, blah. So therefore, they won't say, therefore, price doesn't matter, but they're always justifying that current price. It just doesn't work that way. When the market goes down, which it will, Amazon will go down more. So the market goes down 20%, I guarantee Amazon will be down at least 30 or 40%. Because that's the way it works. The biggest, most hyped stocks get beaten up the most on the way down because they're the ones that cause the biggest run-up.
Does this run-up show the possibility of what people think about Amazon, perhaps when it recovers, that this should be something that you want to buy when everything does fall?
How much? Amazon's at $19.13. Does that make it a screaming deal at $1,000? I don't think so. I think Amazon is a $300 stock right now.
That's a huge difference.
It's a very huge difference. But guess what? 4 years ago, I thought it was a $100 stock, $50 stock. So over time, it's gotten better and better and better and better, and its value's gone up. My whole contention is it's still way more than it should be. Will Amazon be worth $2,000 a share someday? Possibly, but it's not today. I don't care what you say. It does almost $300 billion in sales. It cannot triple in value in the next 2 or 3 years. It cannot do that. And people price in that big growth already today. Guys, you can't price in big growth today, and then when it grows again, you make it grow. You make the stock go up higher. You're double dipping. You're double counting now.
Is there anything like Amazon? Is there a competitor?
No, but that's the thing. Walmart's growing very well. Jet's growing very well.
I've never heard of that though.
Jet's owned by Walmart. I think they are. Alibaba's growing well. And look at these things going. Listen, was there anything like Microsoft 20 years ago, 25 years ago? No. And that's what happens. Then there's Apple. Then there's Google. All these things. Was there anything like? Remember Tandy in the 80s? Oh, yeah. Thank you. My first computer was a Tandy 1000 RLX. Where are they now?
Tandy.
Anybody remember Gateway Computer with the cow logos?
Oh, the cow. Yeah, Gateway.
They were huge. Where are they now? Gone. I think they're gone. I don't think they even exist anymore. Maybe they do. I don't know. But Dell was the big company back in the day. Now who makes the most computers? Probably Apple. Mm-hmm. Look at these things going. Nobody, especially in the tech world, dominates forever. Google is a great search engine. It has been the number one search engine probably 15 years now. Does that mean it's always going to be the number one search engine? No. Does that mean it won't be? No, but if you look at history, who has stayed the number one company in their industry? Look at GE. GE is not even, they're struggling now. This was like the number one company for how long?
Yeah, 80 years or something? Or?
IBM. What's going on with them? People just always say, well, this time it's different. No, it's not. And that's how people get in trouble. Amazon's different. No, it's not. If anything, Amazon is worth $900 billion and they make $10 billion in a year. So you're telling me if you had the opportunity to buy a company today, and I'd argue that the smaller the company, the more premium you should pay because it has more upside potential. What's Amazon's upside potential? To go from the number one internet sale marketplace to the number 0? I mean, it doesn't make sense. Can they gain market share? For sure they can, because over time, more sales will be done online than in stores, and Amazon will dominate that. But there's no such thing as one dominant player forever.
So who are these people? I mean, if Amazon stocks yesterday was at 1923, today 1914, who are the people that are buying this at 1875 feeling great about it?
Well, a lot of it could be day traders and a lot of people who are just people who say it's a great company. Look at Russell Wilson. Did you see that?
No.
Russell Wilson just signed his big contract. He gave all of his linemen $12,000 in Amazon stock.
Yeah, I saw that. I did see that.
He gave them all $12,000 in Amazon stock. Kanye West bought Kim Kardashian Amazon stock a few years ago as a gift. It's because, it's a great company. But the funny thing is, you ask the person I know who loves Tesla the most, he's a business person who sold his company. There's no way in hell he could possibly ever buy a company in the private market for the valuation that he put on Tesla. Oh, it's different. Why is it all of a sudden different when it's a publicly traded company? You know why it is? Because it's ease of use. Oh, I can buy and sell. It's like
Yeah.
Okay, but it still has to be a cash flow business. Where are you going to get your return from? You get your return from cash flow and building assets. And that, if it's not occurring, it could be occurring and you could sit there and say, it's going to grow forever. It's not going to grow forever. As Amazon becomes bigger and bigger, what's going to happen to its growth? Smaller and smaller. So you're paying a premium because of their big growth, but as they get bigger and bigger, the growth is going to slow. It's counterintuitive. Do you follow what I'm saying? If anything, you should pay, either way. That's where I get confused about it. Does that mean I'm right? No, but I'm telling you there's 100 Amazons out there that you buy at this valuation, you're going to lose a lot of money over time. You're going to lose a lot of money over time. Okay, how many companies will go under all that? Look at the $3 billion company. Look at the Longaberger. They were $1 billion. How many $1 billion companies go to zero? They did.
It's not believable. Yeah, that
it
can
happens.
happen.
It happens. It happens. So I look at these things and think to myself, listen, maybe I'm just not smart enough to understand potential. I understand cash flow. I understand good balance sheets.
Well, I know you've said that you've had money sitting not in stocks for a while.
Yep, and I've looked pretty stupid.
Yeah.
And I'm fine with that. I had at Walsh, last time I taught at Walsh, somebody raised their hand. Very smart question this girl asked. She said, okay, so you've been wrong for a while. How long are you willing to wait? And she goes, how long are you willing to? I go, forever. And she goes, and she literally, her eyes got white. She goes, forever? I go, forever. Yeah. Like the Sandlot.
Yeah, Sandlot.
I don't think they understood that reference. But I said it going forever.
Sandlot was made 25 years ago. So
yes, their parents probably weren't even married.
You might as well have been referring to Citizen Kane or something.
Exactly. I'll wait forever because if I don't understand how you make my money, I'd rather just make 2.5, 3%. Better than putting money into something that has potential that I don't see the path to profit. Then it's just speculation. I don't understand speculation very well.
Yeah, I told my wife, it was funny. It's like, I wanted to play it safe with my money a bit. And now again, folks, I probably look like I have, egg on my face now because I sold at $7.15. But we had
$17.15.
$17.15. I don't know why I keep saying that. Sorry. But I basically, the Amazon stock had become a large portion of my...
And by the way, though, when it went to $15.50, you were like, Paul, you're a genius. And what I say, I'm like, well, hang on a second. I was like, I'm not a genius yet. I'll consider myself a genius when it's below 700-800, and you're like, holy shit, thank God I sold it.
Yeah, and so.
And by the way, even then I'd be wrong because I thought it was overpriced at 280
Really?
back in the day. Yeah, I shorted at 280, and then I got out of the short because it was just kept going up. I'm like, okay, I'm done with this.
Yeah, so had I bought at 15 something and it compared it now, we're talking different to $80,000
For your bank account, yep.
Yeah, in a year. But you are just gambling at that point, right? I mean,
That's all speculation.
Yeah.
I'm not gonna call it gambling. There are good speculators out there, but speculation. I mean, there's an old saying: markets can stay irrational longer than you can stay solvent. I just choose not to play that game. For me, I'm not in the game of doing any deal and hoping some of them work out more than others. I'm in the game of when I do a deal, if I do 20 deals the same way, I'm going to do really well overall. I'm not going to have as many losers, and like I'm not going to have the 4 or 5 that go to zero or lose half their value, hopefully. It still happens. Listen, value investors make mistakes all the time. And you ask 2 value investors about the same company, they're going to have 2 different answers. But I don't think those answers are going to be as wide. Those answers are going to be substantiated with data and facts. They're not going to be substantiated with the substantiation with Amazon is, but look how big it is. Look how amazing they're growing. Yeah. Okay. So you're telling me if I can show you amazing growth, you'll pay whatever it takes to get into it? Well, it's different. No, it's not. No, it's not. If anything, I'd argue that you should pay me a huge premium because Crossroads is so small and it has the potential of becoming a $1 billion company, and drop Amazon because they're already 800, 900 billion. How do you get bigger than 800 billion without some major thing? Listen, Microsoft, I always give the example. Microsoft was the company that couldn't be beat in the 90s. And 10 years later, it was selling for 1/7 the ratios is what it was selling for in 2000. The company that couldn't be beaten. And that'll happen with Amazon. There'll be a time when I'm a buyer of Amazon and everybody else is saying you're stupid for wanting Amazon. And it'll be selling for drastically less than today. And you'd all say to people, so wait a second. It was a great buy at 2000. It's a bad buy at 200 or 300 or 400 when it makes $50 billion a year. Yeah, Paul. Okay.
Wouldn't something drastic in the economy have to happen to get Amazon all the way down to that? I mean,
Nope, because that's not driven by the economy. That's driven by emotion. All it takes is a change in emotion of the stock market. That's all it takes.
That's right. Elon was smoking a doobie on Joe Rogan.
Why did the stock market fall 20% from September to December? What happened in the economy?
You always say this.
Nothing happened in the economy. The economy was still going up. Mm-hmm. It just all of a sudden at some point people capitulated, and then they go, oh, let's go buy, and now it's right back up again. And guess what's going to happen? It'll go down again. And I think this is the topping out process. It just always happens this way. This has happened going back to 1870. Every market peak has operated this way. It doesn't repeat, it rhymes. It looks very similar. This has taken a lot longer than I expected it to. But everybody remember, in 1996, Alan Greenspan said that markets were irrationally exuberant, and it took 4 years before markets started to fall. And I'm on year 4 right now of my things are getting a little frothy. I'm about year 2 of this is insane. And by the way, 4 years ago, I was saying more than frothy. I was like, okay, I sold half my stock 4 years ago. And within the next year and a half, I was all out. So I'm 2.5 years, 3 years into me saying stocks aren't doing shit. And stocks have gone up since then. So I look stupid. What's going to happen if stocks do what I think they're going to do? I'm going to look like a genius. You know what I'm going to do? I'm going to get pissed at the people who say, oh, you were right. Like, you know what? F off. I knew. I look at values and say, I react to values. That's it. I just react to values. What I perceive the value to be. If it's right, I buy it. If it's not right, I don't buy it. If you do otherwise, great, good for you, have fun. But don't complain to me if your stock falls, by 70, 80%. Oh, that won't happen. Okay, tell it to all the internet companies that went to zero in 2000.
Tell that to the Longenberger 401k.
Yeah, well, I don't know about 401k, but the pension.
Yeah, pension, yeah.
I look at that. By the way, 401k is a type of pension. So either way, we're getting pedantic
Sorry.
here. No, that's fine. But I look at that saying, people say, oh, no, it's different. Well, back then they didn't think of it. They thought it was different too. Oh, internet's changing the world. Internet's changing the world. It's like, okay. I'm getting the cue from Tim, our producer.
Great. That means we're droning.
Double wrap. Double slap.
Thank you for your insight on this. Thank you all for the listeners, the watchers on YouTube. We love, excuse me. We love the following. We'll bring you some more dad jokes and some more takes on stock, real estate, investing. And Paul has been moving and shaking with some of his properties, and so you're going to get more podcasts on that. So stay tuned. More deals of the week, more insight from
And message us on Facebook and Instagram because we got some people requesting things. Yes, make sure you request what you want to hear because we listen to it.
Yeah, we do. Thank you, everyone. Thanks for listening.
Our DoorDash is going to be on the way.
Talk to you soon. Go Chipotle.
Yeah, bye.
Bye.